we also know who can use and then who cannot use, all right? Now, we've now identified candlestick. Now, it also based on the time frame that the candlestick is drawn. Now, what does the time frame means? The time frame only means within a specific period of time, how did price react? Okay, so we are only talking about this area being 6 p.m. That's 18 GMT. That's 6 p.m. Ghana time. Between 6 p.m. to 7 p.m. or 18 to 19, market was buying. Market was bullish. Okay, we are saying that market open at this level and then closes at this level, and then it came as high as this area before it closes, and then when it opened, it came a little bit this area before it buy. That is the interpretation of candlestick. Now, the size, how big the body of the candlestick is, not the widths are always the same. So let me use the word height. The height of the candlestick actually tell you more about the momentum in price. For example, we can see that we cannot compare this body with this body, and we cannot compare this body to this body. We cannot compare this body to this body. We cannot compare this to this. They are all different. Okay, so all these now gives you different interpretation of the market of price in the market. Okay, now the same 1 hour. How can market just move from here to here within 1 hour? But within this 1 hour, how many hours do we see? And price never get to this area. 1, 2, 3, 4, 5, 6, 7. 7 hours, market couldn't touch the same speed it take 1 hour. Okay. So all these has a name, and then it has effect on market, and then it also affect decision you can make as a trader, right? I'm trying to take it one by one. Now, all these candlesticks interpreting price every 1 hour, every 1 hour, every 1 hour. The length of the wick, which is this area, the tiny one here, this one, this one is long, this one. We can, when we look into it, we realize that the formations are not the same, the sizes are not the same, the looks are not the same. Now, when we go back into a little bit, we can start seeing some basic things, like this looks like a cross. This looks like a cross. We call that one doji. We call that one doji. This one, it looks like a cross, but not too long like that. We call it dragonfly. It's also called inverted hammer. There's actually a difference between dragonfly and inverted hammer. I will spot all those stuff for us in the class. So this is called inverted hammer, right? This is inverted hammer. This could also be called hammer. This could also be called hammer. Now, we all know how the hammer is drawn, regardless the situation. There is some small tip, especially the local hammer, okay? Sorry? Especially the local hammer. We have those things. Then we also have, this one will also be called hammer. This one is also called hammer. This one is also called hammer. This is also called hammer. We can mention this as a doji. Now, ask me, how am I identifying the name? Unfortunately, I've been seeing it for over 4-5 years now. Okay. But your own may take time, like slowly but sure. Okay. Now, we can call this candle Mariboso candlestick. All right. I will check the real name. but you can do research. Either Marubozu or Maribozu, any of them. Yeah. At the end of the day, we are just talking about a candle with a tiny wick or no wick at all, right? Now, we also have two or more candlestick coming together to influence your decision. Two or more candlestick coming together to influence your decision. Now, we call that candlestick pattern. We call that candlestick what? Pattern. For example, if we take these two candles together, put them together, these two candles is called harami. But what type of harami is it? It is a bullish harami. Okay? These two candles. Now, what does it mean? We see the first candle is bigger than the second candle. So it's like when you put the height of this candle into this, the red one will swallow the green one. So it is a bullish harami, and it gives confirmation and entry. You can use it to do enter a trade, make a decision in the market at the same time. All right. So that is what we call harami. Now, this happened below. When it happened above, with how it happened, will give you the name bearish or bullish. Okay, bullish we are expecting upward, bearish we are expecting downward. Okay. Now let's look for some other ones. Observe. Oh, come on. So let's go through. Let me see if I can get you some other examples. I want to get engulfing. Correct. Let me just use this for example. This for example purposes. For instance, when we take this candle and this candle, you realize that it is the opposite of what we said for harami. Okay. So this actually will become a bullish engulfing candle. So this one is smaller than this one. So the green one swallows the red one. Hence it will be called bullish engulfing. Now when we take these two candles, yeah, when people who know the rule are breaking the rule, I don't know what we should do to them. AC claim.
Oh,
Right.
I think we'll want them for now, and next time we'll have to kick them out for a minute and bring them back.
Okay, that is fine. All right. So don't break the rule, especially if you know the rule. All right. So these particular two candles here, we can now see that the green one is smaller than the red one. All right. The green one is smaller than the red one. So at the end of the day, it swallows the green one. So we will call this, it's also an engulfing candle. Okay. Now, when we take normal English language, engulf only, sorry, wrong spelling. Engulf means, engulf is all about something that overshadows something, right? That just like the name sound. Now, where it happened also gives you a consideration and what to do at that particular time as well, right? Now, we have more of them, including I wish I can spot. So I don't draw. I'm not good in drawing sometimes. So okay. Okay, so we can see an engulfing here, engulfing bullish. Yeah, as well. This is a dragonfly. This one formed without a wick here. So this is a dragonfly. Now, when you see this in trading, you see this in trading very clear. Like this is 1 hour. After 1 hour, it gives you a doji. Means that the buyers couldn't push above, sellers couldn't push below. And then you now see another hammer. The buyers are in control, the sellers are taking it. You wait another 1 hour, you see inverted hammer. 1, 2, 3, 4. Actually, the first green one, which is the dragonfly, is telling you that hey, the buyers are not holding the trade. Okay, it gives you a reason that hey, market is rejecting. So should you have entered a buy at this area? Should you have been in a buy at this area? It could also be a reason for you to be thinking of exiting the market at the same time. Now, if you were not to exit the market will come back to your level, right? That's fine. But then it's end up going up. Okay. But then if you're a scalper, definitely you would have exit somewhere here looking for an entry and then ride this up at the end of the day. Okay. Now, what it also means is that if you wait this hour, seeing all these rejections, and then you saw a little bit of this area. Now, when you take this candlestick into consideration and all of this, you realize that the red one here has swallowed all of them. You can consider it as an engulfing, hence a short. Now, that short, which is a sell, did not hold. Market reversed a little. But then based on your entry, your stop loss would definitely be safe, so you wouldn't have hit stop loss. The market would have come into your favor. You'll be looking at somewhere this area to take your profit. So this would have been a successful trade, right? Now, these are the point where probably you can stay with machine for a few hours to see what will happen, or set an alarm or set an alert. Once a while, you see what market is doing, and then it meet your demand and you make decisions with it, right? Now, the same formations also help us to understand reaction point of markets, reaction point of price, reaction and decision-making point of market. Now, what that means is that as you are seeing these reactions and elemental performance of the candlestick, it gives you how each candlestick behave at a certain level. Hence, chart. Okay. Now, the chart now helps you understand the outlook of the market. The chart also helps you understand the direction of the market. The chart helps you know your entry and your exit. So entry, exit, points. All right. Now, if you are looking on the chart, it helps you know your entry and your exit. Now, the exit are in two ways. It can be XL or TP. Okay. There are two ways to exit the market. One is market hit your stop loss. The second one is market hit your take profit. The bonus one is what? You blow your account, which I know none of you will experience, not because I am pouring blessing on you, but I believe you follow instruction. Now, if you blow your account, it is called margin call. It means that the fund you are leveraging on, you are operating above it. Okay, so the broker will give you a notification or close your account. Sometimes you may end up seeing negative based on the amount of money you overchop. Okay, that is why you always have to manage your risk. You have to manage your money. Now, risk management and money management. Risk management is the bigger circle. Money management is what? A subset, right? Emotion is a subset. Risk to reward ratio is a subset. Trading psychology top all. Now, all the things we are learning here, it's only like about 90% of trading. Oh, sorry, 10% of trading or how to trade. Okay. The 90% will now come in to base on what? Your psychology. Right. Now, after learning forex, you understand all these things, and you want to implement it. That is perfect. But the errors you are making, you are documenting them, writing them, why it worked, why it didn't work. All these things come together to give you what? Your trading journal. Now, the routine check for you to be able to know how it worked, why it didn't work, is actually what we call the trading plan. Okay, so the trading plan now helps you know what you need to trade, the currencies you want to trade as you are acquiring the skill. You are noting which currency, okay, anytime I look at the currency, I realize that this one, when you want to move, you move in a direction than this other one. Then you pick it, you draw analysis on it. What is the analysis? What is your purpose of trading? Now, all those things actually will now define your real goal, your approach to the market. Okay. All right. Now, after you do this consistently, trading plan, following it, keeping a record, reviewing your record, revising the market, reviewing the chart, why it didn't work, why you hit your stop loss, why you hit take profit, why the take profit hit so fast. When you put all those things in paper, automatically you will start repeating the real attitude of a trader. Hence, your psychology become very powerful. Okay, so that's very important. That's just a little bit an offset, but it's very, very interesting. Now, let me now zoom in a little. From today, our practicals are starting. Okay. I didn't get much from the first group, so I would want to get much from you guys, where you should be able to spot some things for me. Okay. You spot, you're already having the candlestick Bible. So you just look at the candlestick, the chart, and spot some engulfing candlesticks. You spot some harami candlesticks. You spot some dojis. You spot some dragonflies. You spot some maribozos, and so on and so forth. Okay. If you don't know, if you spot some and you don't know the name, put it on the chat or in the group. We'll look at it and give you the name. Now, when you start doing that, it means that you are practicing it. And once you are practicing it, slowly it becomes part and parcel of you. Once it becomes part and parcel of you, you develop that interest. Okay. Once you develop that interest, you end up doing it so well, right? All right. So that is just very important to follow. Now, if I am analyzing, I don't look at the chart big. If I'm analyzing, I'm drawing analysis. You don't see me on the chart to see what is the name of the candlestick. Please, it is a bad idea to start the chart like this. The best way is to see the chart this way. Now, when you see it this way, it actually helps you to see what market is doing. Now, the market is not meant just to go straight. No, it meant to do zigzag, up, down, in that order. Okay, so the most important thing is that as it is doing this zigzag, the question is it going down, which is up, or going down? Okay, if you find elemental reasons, that's the basic reasons that it is going down, then you can now project it as was an uptrend. If it is going down, you project it as a downtrend. What do you expect when market is on an uptrend? You check if the market is trending, which we are going to look into. If it is trending or it is moving sideways. So please, these are terms, write it down, please. Trending or sideways. Okay. So if it is moving sideways, we can also say it is consolidating. Also say it is consolidating or ranging. We are going to look at the different meanings. Okay. Now, there are also ways where sometimes when market is moving sideways, slightly uptrend. Okay. That means consolidating uptrend. Right. So basically, best advice or first advice we give many new traders is that when the market is not doing like this, or it's not doing like this, don't trade. When it is doing like this, don't trade. When it is doing like this, don't trade. Why? Because you can make a mistake and then you set your stop loss market to hit it. You set your stop loss market to hit it. You set your TP market to get there, it won't hit it, and keep doing you like that. Okay. So it's always advisable to what? Know when the market is going up. You're going to break all these things one by one so that the checks are clear. Everything makes a lot of sense to you. So when you take when you open the chart, you should be able to know what to do. When you open the chart, you should be able to know what to do. Very, very important, right? So let's now identify market direction. You now see chart. The chart is just representing the whole nature of the market. So we are coming to see the direction of the market. How do you know if the market is going up? How do you know if the market is going down? Now, we know through many ways. The common and easier way I will first talk about is market move in patterns. Now, as we grow in trading, there are points in time where, or when you are researching, there are points in time where people will say A is not working, and B is not working, and C is not working, and D is not working, and E is not working, and F is not working. Then you come and ask yourself, so what is working? Please, the only thing that works in trading is yourself believing in what you do, understanding why you are doing it, and why you need to focus on it. Now, there is nothing like Holy Grail. Let me take my time and write it very well. There is nothing like Holy Grail strategy in the world when it comes to trading. Well, in real life, I don't know, but in trading, there is no Holy Grail. The reason why there is no Holy Grail is the market is not for anybody. The market does not ask permission from CM, AC, OM, McBrain, Mr. Alphonse, Benzema. The market will not come and ask permission that, hey, I'm coming to buy. Are you ready to trade? No, they will not do that. So people say it is good to trade demand and supply. Now, the interesting thing is that a lot of people learn forex and they end up jumping from one place to another looking for strategies because they disbelieve themselves that what they are learning cannot make them money. Now, I can equally teach you all the strategies, but too much knowledge in forex is poison. Simplify it and take what works for you. Now, some people will be using indicators and they'll be making money. Then some people also preach that indicators don't work. Then some people will say, I am a price action trader. Price action trader. They study how the market is moving. Then you hear people saying that, okay, I trade order block. Okay, I want to take all the confusion from you. You hear people say, I trade order block. You also say, I trade ICT, institutional concept of trading. You also hear people say, I am a Falcon trader. You hear people say, I am Elliott wave theory trader. You hear people say, I am a harmonic trader. You hear people say, oh my goodness, I trade support and resistance. People say it's better to trade zone. Interestingly, it's better according to them. You might go and copy them, and then you will feel. People will say, oh, it's better to trade candlestick only. Please, all this, they work. Now, I will explain to you why some don't work at a point, especially indicator, right? Now, when you know the right tools for the right job, it makes things very, very easy. Okay. So on that note, all the strategies or all the methods to approach the market, I can teach you for you to build on, you will have it. And the basic one that you can hold and start making your money, I will teach it. Then the adapts. So those of you who are yet to join mentorship, I beg, remind them because it's,
Okay.
it's very important. I'll be frank with you guys. Please, those on $100. We are not saying that we are not teaching you the best. I beg. I'm teaching everything, but mentorship is mentorship, right? Mentorship is having time for you. Okay, I made this mistake. We go into the chat. Why did you make that mistake? We fix it. Then you don't make that mistake again. He help you grow your account like small, small. Then you start seeing big money, where you can wake up in the morning, like a friend of mine in South Africa, wake up in about 7 their time, which is around 5 hour time. The person made $8,000. Ha! Imagine you are in her shoe. How will you feel? Okay. All right. That's just by the way. Sometimes it's not just good to be too serious. All right. So we are going to learn support and resistance. But I'm not going to teach you the dictionary support and resistance. I will teach you the logical support and resistance. Now, when you apply the logical support and resistance, it actually works. When you use the logical support zone and resistance zone, it works. When you use institutional concept logically, not because this big trader is using it and he bought Benz, not that one, it will work. If you're using moving average, it will work logically, right? So please write it in your book that I will be a logical trader, right? All right, then you add it up again that I will be an observational trader, right? I am an observational trader. Me, Mark. Yeah. Everything about my life is based on observe. I behave like cat sometimes. Yeah. I will wait for 2 seconds before I act. Then stuff like that. Now, when you are observational trader, you are able to look at the market the way the market wants you to look at it. Now, when you look at what are the husbands and wives? When you look at your wife, the way she wants you to look at her, there is peace. Oh, Issy, are you there?
Yes, I'm here.
But it's true now.
Yeah, it's true.
All right. So take the market as your wife. Those who are not married, I'm sorry. You have to do it fast. The wives are the best example to use right now. Why? Because interestingly, the only thing that can break a man's heart is forex market, better than woman. Right. So we traders, we don't fear disappointment. It's part of us, right? Now, when you see the market the way the market wants you to see it, you will act towards the market the way it wants you to act. So the market will not say, hey, I am going to sell. They will be telling the market that because this is a resistance, this is a support, you must buy. Hence, you will buy, and the market will sell. Then some people will start praying to God at that moment that God make the market go up. At that time, God doesn't work over there. All right. So we are starting with support and resistance. I will do some drawing, but this drawing is just for you to grab the concept of the support and resistance, not to go and draw. All right. Now, literally, we draw support and resistance. Now, what is support? Anything that holds something. What is resistance? Anything that rejects something. Okay, a bouncing area. Okay, and a holding area. Okay, so let's say Um, let me change. So let's say market starts moving from the bottom here and push all the way to this area. And then something happened and it refused to come down. Let's say it start doing something like this. Price hold, market hold there a little. But the question is that will it break the line or it will return? So when it return, then we can now say this resists it. Now, we all know, or in trading, we understand that resistance is at the top, like your ceiling and the floor. But it is not logical. It only becomes logical when market get there and made it a resistance. And there are conditions you will see to know that logically, psychologically, that is a resistance. And what do you do at resistance? We look for a sell opportunities. Then the market drops, come back here, and then start doing something like this again. And then you want to be sure if this line, this blue line, is acting to support the price from breaking it. So if market couldn't break it, it bounced back again, then we can now call the blue line a support. Okay, this is a support. And then what do we do as support? We expect a reversal mostly, right? A bounce. So we what? We buy. There are instances the support will be there. You will buy and market will sell and turn that support to a resistance. There are instances. So support can become a resistance and a resistance can become support and vice versa. Okay. Now, when a resistance become a support, it means that price broke that resistance and then come back to touch that area or that price either multiple times or once. Now, if it touch it and go, we say it tests. If it touch it and come back again and it got rejected, we say retest. If it goes and come and touch it again, one retest, two retest, three retest, and that is how the market reacts. Now, if you understand the logical around this support and resistance properly, you can have an edge over the market because the reaction of resisting power or supporting power in the market actually gives birth to every other thing, be in demand and supply, support zone, resistance zone, any of that stuff you will meet at the end of the day. And candlesticks actually helps you to understand. So when you build on candlestick and understand support and resistance, you can be able to control the market. You can be able to make some good decisions in the market. You can be able to make some good profit and maybe some losses or minimize your losses at the end of the day. All right. So we'll break it down in subsequent classes, practice it on the chart. Then I'll say, can you please spot support and resistance for me? Okay. Now let me twist a little, right? Not to confuse a little, but twist. Now, price reacts on previous data. Hence, you can use previous data to forecast the current market. Okay. So for instance, in Ghana, they will say if you want to cross the road, do what? You look to the left. Is it left? Yes. Then you look at the right. From the right, you look at the left again before you cross. The interesting thing is that the left, the car is closer to you. So you need to confirm how close is it before you move. right? You look at the right because the car is coming. So you can master the distance and move on, because one would definitely be approaching before the one coming. Now, in the market, wherever you are, as it in here, we use the left data for analysis, project the right data for what? Direction. So the only thing when it comes to analysis is the ability to focus the direction of the market from the nature of the market. How did price behave at that particular price? And that is what will influence your decision. Okay, how price reacts at that particular price. So thank you so much. Um, sorry to cut it short. My battery and my network, I think I didn't break. So over to Mr. Clem for question and answer. We can take about yeah, I have some few 20%, so we can take some few questions. Then we call it a night.
Okay. All right. Thank you so much.